Good morning and welcome to Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me live at MarketSite is Tony Zhang. He's the head of product strategy over OptionsPlay. We're going to discuss something that we haven't spoke about in a while, have we, Tony? Cryptocurrency.
Yep.
It's like it completely fell off the media's radar, and understandably so, with the equity markets acting up the first week of February. But I would imagine that the rise and fall of Bitcoin to 20,000 to below 10,000 certainly had something to do with it also.
Yeah, absolutely. So the first time we spoke about Bitcoin, it was trading at 2,500, which sounds quite a long time ago. And what we had was a huge run up to about 20,000. This was mostly due to speculation. And a few months ago, we actually had a huge fall down to about the $7,000 level. And this was really a few different things. One was really around regulation and the concerns about how it was going to be regulated. We had a couple of exchanges that were hacked, so there was a few $100 million that were stolen, so a lot of people got a little scared from that. And then we had things like the US regulators stepping in to stop a couple of ICOs, very large ones in the hundreds of millions of dollars. And this was compounded with a few other things, such as US banks trying to prevent people from depositing money into their exchanges using their credit cards because there was some fraud around that. And then lastly, we had things like Facebook banning ICO ads and things like that. So all of this compounded down to where Bitcoin dropped from 20,000 down to about 7. And then just a few weeks ago, we got a little bit of clarity from US regulators around how they want to look at regulation here in the US. And I think that brought a little bit of support, which brings us back to about the $10,000 level, which is where it's trading at now. So ultimately, this was a huge, crazy ride for a lot of traders. And I think this is actually really good because this gives us a bit of price discovery. It gives us an idea as far as where buyers and sellers are, which is really what traders are looking for, is a bit of history so that they're no longer in uncharted waters. And this is really good for traders to step in, and it brings a bit of stability in the markets because it's no longer one-sided.
Right, so then you think that cryptocurrency as an asset class or, digital assets, if you want to call it that, it's here to stay.
Absolutely.
I think it was a one-time thing.
Absolutely. So I think traders are going to probably start stepping in, trading them more actively, and I think it's going to become an asset class.
How about the futures market, Bitcoin futures?
So Bitcoin futures is interesting. It's been trading for a few months now. We've gotten slowly growing volumes, and I think the Bitcoin futures solves one problem that's always been an issue in the cryptocurrency space. Number one is the fact that we talk about this as a digital currency, but as a currency, it doesn't really it's not really a store of value today, and you can't really buy anything with it or any goods and services with your Bitcoin. And this is part of a catch-22 problem right now, because to accept payment in Bitcoin, you don't want to accept all the fluctuations with that. And that's really one of the problems with people accepting payment in Bitcoin. However, Bitcoin futures is traditionally one of the things that you would use to hedge that type of exposure. So the fact that there are Bitcoin futures is a step in the right direction for that. However, there's still a lot of problems currently with these Bitcoin futures, such as the fact that they are not physically delivered. They're simply cash settled, which is a problem for hedgers that are looking for this. And the fact that they are currently cleared based on either one single regulated exchange or multiple unregulated exchanges. We've had problems with manipulation. We've had problems with hacks. We've had problems with outages and dislocation with some of these exchanges. So these are all of the problems that currently Bitcoin futures doesn't quite solve, but it's certainly a step in the right direction to allow in the future for people to take payment and hedge that exposure that they have using futures.
I also think traders and people in general just expect everything on demand right now. And they want the crypto market to look and feel and be regulated as like mature equity and bond markets. But look, there was a lot of pain that those markets had to go through to arrive to the model that we're at today. And even still, that's always going to continue to evolve. And I think that we have to remember that as traders, the cryptocurrency is going to have to follow that same course of progression as well.
Right. So what's interesting is the regulatory landscape. We've got a little bit of clarity from the SEC and the CFTC a few weeks ago. They held a meeting in front of the Senate Banking Committee, which was actually something that addressed two main concerns that most people have with the crypto space. Number one, with the unregulated exchanges. That was a problem, and the fact around ICOs and whether that was deemed securities. So the CFTC and the SEC stepped in and provided a bit of clarity that I actually thought was actually quite good, because the CFTC SEC, despite saying that they don't necessarily see an intrinsic value in cryptocurrencies, they do see that fact that there's value in blockchain, and they do see that there are traders trading this and the fact that there's volume behind it. So what's interesting is they're looking at the cryptocurrency space very similar to the FX markets. They're really interested in making sure that there's an orderly and fair market, and that when the funds that you deposit into the exchanges there are some capital controls around that. So this is really taking the same direction as FX trading, which I think is good because they're not overstepping the bounds and saying they want to ban cryptocurrency or ban Bitcoin trading or anything like that. So I think that's good from the trading perspective. And then on the SEC side, they've basically said that, if companies are trying to issue securities and getting around securities laws by calling them ICOs, they are also trying to go after that because that's really the part of the market where you have potentially a lot of fraud and scams. And this is in the backdrop of the fact that 2018 is actually on pace to do far more than 2017 from an ICO perspective. We're almost at $4 billion in ICOs in 2018 in just 2 months versus only $6.5 billion in all of 2017. So the fact that this is accelerating is certainly a concern for regulators because there's a lot of these are built on nothing but just promises and a concept, if you will. And I think there's a lot of risk to that we haven't quite seen yet that's coming down the line. So overall, I think the fact that the SEC and the CFTC are focusing on these two things is correct, and I think it's the right direction that we're going in, combined with the fact that we're having Bitcoin futures, which allows potentially future payments of people to accept payments and hedge their risk, I think is all, generally speaking, a step in the right direction. This is just the tip of the iceberg, though. We haven't seen what's really to come yet.
And to wrap up, and this might be a stretch here, do you think it was coincidental that we saw the plunge in cryptocurrency prices the same time that we saw the volatility in the U.S. markets? Was it more of a risk-off thing or more of a coincidence?
I think it was more of a coincidence. I don't really see a huge correlation between the two. I don't really see this Bitcoin as really a risk-on, risk-off asset just yet, but that's yet to see. I mean, I could very well see that coming in the future.
All right. Well, thank you very much for joining us at MarketSite. And traders, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.